In this short video on job costing, we're going to be demonstrating an example of how to calculate and apply overhead to the job or product that you're working on. Here we have Thomas Company. They use normal costing. So again, at this point, as you're reading through these questions, you're going to want to be able to pick out some key terms. So we need to be able to distinguish what normal costing is versus actual costing. So we learned that in previous videos. But remember, normal costing is when we take an estimated overhead rate and apply overhead based on that rate. And we'll demonstrate that here in just a second. It allocates manufacturing overhead costs using a budgeted rate per machine hour. So again, as we're reading through these, make sure you're picking out key things. We now know what our allocation base is, and this is machine hours. So overhead is based on machine hours. That tells us that that is the allocation base. We have the following data, and we have budgeted information, and we have actual information. So both of those pieces are important in this process. Recall that step one in the process is to calculate the rate. Okay, so we're going to calculate our rate, our allocation rate for overhead. And to do that, we need estimated overhead divided by the estimated allocation base. So we can see in the information given here, the estimated overhead is $4 million. And we read in the problem that the allocation base was machine hours. So we need estimated machine hours, and that was 200,000. So when we do the simple math here, we find that the overhead rate is $20 per machine hour. Step two in the process is to calculate the amount of overhead applied or overhead allocated. So we're going to take the rate that we just found, our estimated rate, and multiply it times what actually happened with the allocation base. And remember, the allocation base in this case is machine hours. So we just calculated our rate to be $20 per machine hour. So per times. Now we need the actual machine hours. So if you look at our information, we find actual machine hours to be 195,000. So the amount of overhead applied or allocated is $3.9 million. Now that we know what amount of overhead we are allocating to the job or the product, I would like for you to press pause on your player right now and see if you can calculate the amount of under or over allocated overhead based on what we just calculated as allocated. Get the difference and find out, are we under or over allocated, and then come back and we'll check our answers. Okay, so now that you have calculated any under or over allocated overhead, let's see how we got that. So we just calculated applied and allocated overhead to be $3,900,000 on the prior part of the problem. Well, they tell us in the information that actual overhead is $3,860,000. So that goes on the debit side of our overhead T account. And it looks like we're going to be over-applied because the credit side is higher than the debit side. And the difference is $40,000. So we are over-applied or over-allocated. Now remember, this is the amount that gets applied to the job, what we calculated. So this is going to move into overhead, that $3.9 million. But we also have to journalize this amount. So let's see what that would look like. So if you look at the T accounts here, you can see that we are debiting work in process for $3,900,000, and we are crediting the overhead account for $3,900,000. So we're actually kind of going in reverse because you know that journal entries typically come first. But I'd like for you to see the picture first, so it makes it a little bit easier for us to understand what's going on. Also, keep in mind, we do not want a balance in the overhead T account. So we want overhead to be zero. Well, if we have a credit balance of $40,000, we have to debit overhead to get rid of it. So now we have a zero balance here. If we credit something, we have to debit something. So if we are debiting overhead for $40,000, then we will credit cost of goods sold for $40,000, thereby reducing our cost, because recall, we were over-applied. We over-applied our cost to the job. So when we fix that problem, cost of goods sold should go down, thereby making net income go up. Now, this is also a transaction that has to be journalized. So we'll go up here in the upper right, and you will notice in the diagram that we are debiting overhead for the $40,000, and we are crediting cost of goods sold, decreasing cost of goods sold by the $40,000.